nights.
Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Ekta Batra, and these are the top stories that we're tracking this afternoon. Stocks slide across the globe on high interest rate worries. The Silicon Valley lender SVB Financial reports losses on its bond portfolio. The Nifty holds 17,400, even as the midcaps fare better than the headline indices. Most sectors flash red.
Ajanta Pharma slides after the board approves an over 300 crore rupee buyback, its third in several years.
Electra Greentech and JBM Auto gain for the second straight day on Maharashtra SEV push. The state announces the expansion of its EV fleet.
Equitas Small Finance Bank falls 6% in trade as its reverse merger with Equitas Holdings gets completed and shareholders are allotted Equitas SFB shares for trading starting today.
Oh, well, when it comes to the markets, it's clearly a down day. Markets are worried. The benchmark indices are down 1%. Nifty hovering around 17,400. Pull up the intraday chart and you would see that volatility took place in the first 1 hour. The Nifty went down to levels of 17,350 after a gap down opening. After that, it saw a bit of a recovery, but in the last 3 hours, from 10:30 a.m. to now, the markets have been hovering around that pivot level of 17,400. Key indices down 1%. The banks are underperforming. What's the way forward? Dharmesh Shah of ICICI Securities ICICI Direct is now with us on the show. Dharmesh, down 1% on the Nifty. Earlier this week, we were hoping for a breakout on the way up, markets pushing higher, but things have turned.
Yes, I think so. We still remains to be in that trading range. If you see, Reema, we have been trading in this range of 17,200 to 17,800 for last 2 to 3 weeks. And we believe, I think so, today there is an important data from the US tonight, and next week also you have CPI inflation data which is expected to come. In all this process, if we manage to hold 17,200, which we expect to hold, we will see a technical pullback in the coming week. So we believe, I think so, market, yes, on the back of global sell-off, we are seeing a gap down opening. But we believe 17,200 remains to be the very strong support, which we expect to hold. And maybe I think there's some bit of a positivity from the US market tonight or maybe on the coming week should see a sharp spike in our Indian market. So we believe, I think so, 17,200 to 17,800 is likely the range for the Nifty, which we expect to hold in the coming week.
Okay, well, we've got the Feb mutual fund data, which is on your screen, and there is a 26% rise that we've seen in terms of equity inflows this month as well. So it's coming at around, net equity inflows have come in at around 15,657 crores, which compares to around 12,472 crores. So it's an over 20% rise on a month-on-month basis. The other segments, such as the hybrid flow, has come down. We have the liquid fund outflow, which has risen to around 11,304 crores versus 5,041 crores. And the total debt scheme outflow has also risen on a month-on-month basis. So those are more of the fineries. Even the ETF outflows or the ETF inflows have fallen quite significantly. So maybe that should come up for you. But the big headline number is that people continue to invest into the equity market. So there's really been no deterrent despite all what we've seen globally, as well as what has happened with Adani stocks in terms of the risk sentiment for the markets. So the net equity inflow continues to be strong, 15,657 odd crores for the month of Feb as compared to 12,472 odd crores in the month of January. So more details on your screen. The large cap fund inflow has reduced. It's almost half, 354 crores to around versus 716 odd crores. And the other details should come by on your screen as well. Dharmesh, in terms of a couple of stocks which you would probably take in as a technical strategy into next week, which is probably showing strength, what would it be and what would you recommend?
Yes, so technically we remain to be positive for the PSU space, where it's clearly showing the outperformance even in this falling market. So Hindustan Aeronautics among the defense space remains to be our top pick. If you look technically, I think so the stock has witnessed a breakout of last 3 months trading range, which was in the range of 2,300 to 2,800. The breakout too has witnessed with a strong volume. One more point to highlight on the key highlight is that the stock also has witnessed a faster retracement, where the 10 weeks of decline is getting retraced in just 4 weeks. So clearly showing a robust price structure technically. We expect stock to head towards 30 to 40, keeping a stop loss of 25.80. So HL remains to be a top pick inside the defense space. Apart from HL, power space also is one which is clearly showing the resilience. If you look at the most of the power stocks, they are back in limelight after long consolidation. So Tata Power among the power space remains to be a top pick. Where if you look on the weekly chart, the stock last 2 months has been forming a very strong base in the range of 190 to 210. We see, I think so, breakout of a falling channel. It is near the cups of the falling channel breakout. We expect the stock to head towards 224, keeping a stop loss of 198. So Tata Power and HL remains to be a top pick inside the current corrective phase market.
Okay. Thank you very much for joining in. Let's talk a bit about the February mutual fund data. Swaroop Mohanty, Chief Executive Officer.